As SADC, we need to start centralizing data into an infrastructure backbone that any technology that we're discussing today can build on a stronger foundation. And climate intelligence should become an infrastructural resource throughout SADC, because it's all one ecosystem and one organism, really.
So if we could stay with the data topic there for a moment, it's becoming increasingly important. We've heard it in a couple of sessions this morning, speakers referencing it, and Tara just spoke about it. And then we're also using all these big words, geospatial data, digital farm records, precision technologies. How can all of this help to make farmers, financiers, governments make better decisions about climate resilience?
Yes. Data is the connector of all of this. So yeah, I think I wrote it down here because I won't remember it. But I'm obviously a big proponent of regenerative agriculture. So we have a Horizon, we do carbon credits for regenerative farmers, and we've paid farmers for their good stewardship of their land and building carbon in the soil. But yeah, healthy soil creates resilience. If we have technology that sufficiently enables us to measure that resilience and turn that into data, then that data is measured resilience that can enable financiers and so on to actually put a value on it. So resilience basically in a healthy soil becomes an asset only when you can prove it through data. And yeah, we don't know what the future holds, but data is like the CV of your farm. So if a farmer collects that data, 10 years ago, the farmers would have never thought that the data that they collect could become relevant for getting carbon credits. Now they're being paid out for that stewardship that they are doing. The bankers, there will come a day, and it's already happening, but it'll be more and more, where they're going to have sustainability-linked loans, where farmers get tiered into levels of sustainability. And the more you can prove, the better your access to those green bonds that, yeah, beneficial funding rates and so on can be. So data connects everything together, and yeah, so it is absolutely critical and needs to be encouraged.
It's so fascinating how the core of our discussion is about climate smart technologies, but we're touching on so many different things. And if we could pivot the conversation slightly to regenerative agriculture, which often delivers benefits over several years, although farmers have to face those costs up front, and it's not always that they find partners who are willing to finance that, Desiree. A month or so ago, Kagiso Trust convened this conference called Regenerative Futures SA, and before that, we spent quite significant time with farmers across this country who are supported by Kagiso Trust, including Rustlers Valley in the Eastern Free State, and it helps because they've got a partner, but most don't, have a partner that backs them when it comes to regenerative agriculture. So I guess my question to you, Des, is what innovative financing models could help farmers manage that transition? And not just the large-scale farmers, the smaller emerging producers as well. I hate the word emerging producers, because somehow people emerge for decades and they don't get anywhere.
Thanks for that question. I also don't like the word emerging farmers, because you've got someone who's been farming for 10 years, but they still call them emerging. I'm like, how long are you emerging? But the question you asked is quite important, and this is why for me, the scaling up of this initiative struggle most of the time, because of the funding model that is used, right? So for me, I engage with a lot of farmers across the country, and again do a bit of research on the SADC area as well. But what I'm picking up is farmers are not resisting the principles of regen agriculture, and in many cases, these farmers understand the importance of soil health, better water management, biodiversity, and great resilience of drought. The challenge is that the cost is upfront, while the returns are seen much later or several years later. So the real question is not whether regenerative agriculture works. The question is whether our financing, and I was saying our because I'm in the finance banking sector, our financial models, our products are designed to support this transition. So first, I think we need what is termed as patient capital. That is needed to ensure that these funding models can be able to afford or support regenerative agriculture. So if you look at agriculture systems are based on biological times. And if you look at our financing, it's based on financial reporting cycles. Usually that's where the mismatch happens. And those leads to farmers need to invest in the soil health and resilience, and we need financing mechanism that can support that. But most of the time it leads to financial structures where they will take a short-term financing to finance and transition that takes 5 years, and that leads to a struggle. That's why we need this patient capital that can give a longer tenure. The second point, we need a greater use of blended finance and risk-sharing mechanisms. So private sector participation remains small in the space, and that tells us that commercial finance alone is not enough. We need climate smart funds, we need the DFIs, we need the government to strategically de-risk this investment to allow the private sector to also participate at a large scale. And lastly, which is the third point, we need to stop thinking about credit in isolation. Farmers do not need a loan only. Farmers need an ecosystem. Finance works better when it's combined with technical support, the data that Michael's talking about, insurance, market access as well. But this is particularly important for what you touch as small farmers and emerging farmers. In many cases, the challenge is not willingness to adopt these practices. The challenge is the access to capital. And capital that is patient, capital that is of a long tenure. So if you look at SADC, we recognize that there's no one size fit all. A grain farmer in Zambia is different from a livestock farmer in Botswana, and different to a horticulture farmer in Malawi, maybe, if we look at it. But the ultimate future lies in connecting the different parties to allow this financing, connecting the commercial banks, partnering with the DFIs, and partnering with government as well to allow the ecosystem to work better to support the farmers.
I quickly want to stay with the region topic and go to Nadia. Although, Professor, I'm very scared to talk to you about regenerative agriculture because I know you're very passionate about it. But regen brings together soil health, biodiversity, livelihoods, food security, economic resilience. And when we talk about scaling these approaches, how do we ensure that it delivers benefits across the entire food system rather than becoming bright, isolated projects?
You know, the most important thing is going to be to be vaguely right rather than precisely wrong. So we must be quite clear on this, because when we build access to agriculture through finance, through data, through all this, through mechanization, we are actually constructing an institutional edifice that's very hard to engage. And actually what we are finding in Africa today, there's less agriculture in Africa today. There's a large-scale disengagement from agriculture because the institutional threshold to engage is so high. So you can't just farm, you must get land, you must have a tractor, you must have finance, you must have insurance, you must have all this stuff. We're killing agriculture, and we're allowing only bigger people to get into the game. So where's the solution? And I think I've kind of just saw it here. It's already there. We need to find a way where the financial calculus emulates the ecological calculus. Because if you have the ecosystem intact, it will always be productive, 3% a year. All the time, you know, even in a drought, it'll build. So there is the thing, to marry that enterprise level ecological analysis with a financial and support analysis. That's the holy grail. If we can get that, things are going to come right. But until we do that, we are actually favoring those who are unsustainable. They have impacts, larger impacts that we can't quantify and point directly to, and everyone loses. So, yeah, we have the solution. We must give ourselves the time to work it out.
Ishmael?
Yeah, another perspective to this is I always say, don't sell agriculture. It's a hard sell, but sell opportunities that are there. Sometimes we're selling the wrong thing. We're selling regen, agriculture, we're selling nature positive, we're selling this. Is that what we should be selling? We should be selling that this thing can change your life. It brings opportunity, commercial or otherwise. If we brand it, sometimes the message is lost in the branding. It's really about if you do 1, 2, 3, 4 things and they will bring change and people test them in whatever. Because we get all absorbed in what is regen, what is nature positive, what is this. I think that's the first point, really, that we really need to look at ourselves about how do we actually project things. And all things, and sometimes we don't differentiate between funding and financing. We all mesh it up for everyone because there are some things that are mathematically impossible to pay via loan. And it shouldn't be going in that direction. There could be other ways of ensuring that this thing can find fit. It could be policy innovations via VAT rebates or via whatever. We need really to look at a differentiated approach, also given that we're dealing with very much differentiated terrains. So I think part of it is that as development workers, I think we failed, in as much as, in my view, researchers have also failed to a large extent. And we tend to blame farmers that they are not adopting. And that maybe it's because of us who are not. I challenge this, the push side. The pull side might actually be being inhibited by the push side because we think we can get them going. But maybe we need to find ways of getting them going by themselves as part of this. There is talk about risk sharing. That's fine. But if you look at it, really, look at the price as FAO, I've read from FAO that the final price of a product is at least 3 times much more than where it is produced. So if you also don't share that part, you only want to share the risk, but the money that is being made up there you don't want. So it's also not the right approach. That talk about risk and reward sharing rather than risk sharing only. And why is it that those that are actually benefiting from it massively are not part of the solution where things are happening on the ground? At the end of the day, it's the banker and the farmer who are looking at each other when things go bad. And everyone is scot-free. So we need to crowd them in somehow in a systems format. I'm arguing for some reconfiguration of how things should operate.
Desmond?
I'm noting and I'm in agreement because, like you're saying, at the end of the day, it becomes a bank and a farmer when the farmer is at risk. But the ultimate person who sold the goods is not in the picture anymore. So we need to reconfigure that quite well to have them playing in the value chain. And more importantly, Prof, I just want to go to the point. We tend as well to get the farmers confused. You need to farm this way, you need to do regen, you need to do this. At the end of the day, for me, you need to farm responsibly. And sometimes we tend to box these farmers. This one is doing regen, this one is doing regenerative, this one is doing this one is doing this one is doing climate smart. At the end of the day, when we want to finance you as a bank, we're looking at you as a farmer. Are you farming responsibly? Is your farming meeting the SDG 12, which is responsible consumptions and production? That's what we're looking at. And I think even the financing, Michael spoke about it, that's where we're going, and that's where the future financing with the data is going to be. It's going to be saying, are you farming in a responsible way? The funding as well is going to match how you're farming as well. That's where we're going.
Let's see if we've got some questions or comments from the audience. Anybody here wants to open the floor? Please tell us who you are and who you are addressing your question to, sir.
Cuthbert from FAO. I just want to confirm from Prof, you said something that I didn't quite understand. You said sector-wide planning is not, is that correct? Did I get you right?
Thank you. you must also excuse me. I'm not an agriculturist. I'm a social scientist. But
I excuse you.
but if I look at, let's say, the maize sector in South Africa, it's really important, and the yield is higher than we projected on 21 million. It's really, really significant. It's the highest it's ever been. But if you look at the sector, the way it is traded is difficult. It's very difficult for farmers to export all the maize in South Africa, and that's to do with the way they allocate the ships and things like that. And that's all cool. And we can plan the whole national economy in that way. Fantastic. But it misses right at the bottom the solvency of the individual enterprises. And what we miss with that kind of planning is, well, in South Africa, we are seeing less and less farmers. And the majority of the agribusiness enterprises own more than 5 farms. So what we are seeing is, if we plan in a big picture way, we actually neglect the work that needs to be done at the bottom to build individual enterprises. I might be wrong, but I'm worried about sector-wide planning because you miss the individual farmer, and everything depends upon that.
Do you want to?
Yeah, you're welcome.
Just wait for the microphone so the online audience can hear you.
I was worried that I'm hearing you right, Prof. So, sector-wide planning, if done properly, there's nothing wrong with that, because it must pay attention to all those details. The agroecological conditions, the specific needs of every farmer and every player in the chain. So I want us to put it straight that there's sector-wide planning is not the problem, but it's if we are doing sector-wide planning in a wrong manner, that is the problem. Yeah. That is the point I wanted to make, Prof. Otherwise, I totally agree with your input. Thank you.
Thank you to the FAO for that contribution. Let's go to Mr. Levuya, okay? Let's go here. The floor is yours, sir.
Thanks very much. Following Boishoko Ditlak is my name from Kagiso Trust. I'm also not an agriculturalist. I own 1 cattle. But following from that, but also listening, and also I stand for correction because I don't normally listen correctly. It would appear from the presentations that the sector-wide planning, as you are putting, doesn't seem to be coordinated from listening. In other words, the farmers do not see the technology that emerged as directly assisting, if I'm hearing correctly, to the research that actually builds some of these technology for adaptations and for many other reasons, do not seem to be tailored in the manner that it could be directly responsive, and I'm not sure how that can happen across the various levels of the farming hierarchy, right from small, mid, and large. That's one, and it's a matter of coordination. Probably, I don't know how it works in other countries because something might be working, but finally, the enablers, normally the policy architecture and governance in our region seems to be missing in action. Right from the beginning of the presentations up until now, I do not feel the presence, and especially given some of the calamities, if you take the floods in Mozambique and so on, year in, year out, we experience the same thing. We don't see any policy intervention progress. Neither the adaptive strategies don't seem to be playing themselves out, but it seems to be increasing. Like in South Africa, we just experienced the coldest front that I haven't had in my lifetime over the last 2 days. It may increase the following year, but something could not have happened up until now.
I'm going to ask Nadia and also Tara to respond on that. Nadia?
I'm going to just be quick, and I just to ruffle the feathers. You know, the operation of our historical fresh produce markets are not taking place like the book says. They are not equitable, they're not free, they are manipulable. We all got a document in the bag, orange bags on the fresh produce markets. They're not exemplars of free market economics. There's the answer. Sector-wide planning is not working. Sorry.
Tara, do you want to contribute, or can we move on?
I think my contribution to that, and also the panel discussion before, was why would a farmer, or whether it's a small-scale farmer or a commercial farmer, use technologies? And why are there so many technologies? And when are we going to mandate that we narrow the technologies down? And there needs to be commercial opportunities. But if I look at the project that we're doing now in the Eastern Cape with DSTI and TIA and different consortium members providing data as an integrated solution, it's a project that's piloted that showed that it's working. Now the next question is commercial. How do we implement it and how do we sustain it? And there's a quick expectation that farmers should pay for it or someone must pay for the technology. But all these other sector off-takers, because if every farmer in the Eastern Cape starts collecting data, whether you're commercial or small-scale farmer, we start building data layers to understand what crop is actually suitable, what maize cultivar actually is producing the right yield, which will help the next farmer the year after that and the year after that. And I think we are not collecting data in an organized fashion. So whether that's sector-related, I want to come back down to commodity heads. Does the potato industry collect data? Who must collect the data? Who needs to orchestrate the data to render intelligence that goes back to the farmer? Because why is the farmer collecting data? He will only collect data if he'll get finance, if he'll get insuring, if he'll get something. And when I've spoken to banks, banks have even said, we're not interested in the data. We expect farmers to pay for the technology and use the data so that they can show us that they are managing their risk. So my question is, who should pay? And I think that's a question we need to ask, is how do we build technologies that collect the information in an infrastructural way that the province and districts, and then on a national scale, then on a SADC scale, we can really start understanding what crops work where. And it's all linked through centralized data.
Fantastic. Let's hear what Luvuyo has to say.
Yeah, thank you, Ivan. My question is directed to Prof. Nodie. To say, Prof, how do you address, for the benefit of those who, for instance, would cast doubt on regen farming and say that regen farming seems to de-emphasize volumes, quantities. This argument, quantity versus quality. So it seems to, they will say that it seems to de-emphasize volumes, whereas according to the argument, volumes are more important in terms of advancing export revenue, for instance, profits, job creation, and by extension, economic growth, etc. Instead, they say it emphasizes quality of the soil, the environment, things that they deem not that much pressing. Also, they'll also argue about food security, things like that. So how do you address those kind of arguments in relation to regen farming? Thanks.
No, thank you for that. I think those questions and the ultimate answer around regenerative farming is the lowering of your capital expenditure in farming. And I think that is where everything lies. So I would argue that, if you focus on the soil and on the creation of local inputs, and it's actually interesting how in the last 3 years, the ideas of the Sue Johnson bioreactor has filtered down to the ground. Jans Mior is some boertjie there in the bush who's now doing those things. And what happens is that you can farm, and I think the yields at the end of the day are going to be matched. At the end of the day, you lower your capex by maybe up to 40%. I think also regenerative farming, because it changes the focus towards individual enterprises and the densification of activity on the individual enterprise, probably I would say maybe 1 or 2 extra jobs per farm. I'm just thinking because there's more activity on the farm. because there's a lower capital expenditure, your profit curve is going to be a little bit higher. There's less money being put into it, so there's less finance. But I think in the long run, the whole system will run more economically. And I think, this is something that I'm just speculating, and, people like me, they talk a lot. But I think this is now actually an issue that needs to be investigated. And I think the banks and data purveyors, everyone has an interest in this, because we need to understand this. Does an ecological base actually lead to more competitiveness? And I think you're probably right. It's probably still an open question. But theoretically, it's looking good. Yeah, it's looking good.
Colleagues,
Maybe,
we actually go for it.
Can I just come in with another thought on this? I think the conversation should be not this against the other. I think we tend to have binary discussions here. It should be and, because we're dealing with a terrain that is so differentiated. Different things have got their own place, but don't legislate, so to speak, for that to be everywhere. I think there's room for regen, there's room for subsistence, there's room for medium scale, there is sufficient room for all of us, in other words. But it's only how do we push all the different fronts without them seen as being competing with each other. I think that's part of where even the sector-wide approach could look at. And part of it, if I go back to research, it's the same as how do you construct a sector-wide approach in such a way that it is owned. It is the same as in research. I always say about research, some of the work that we are doing is about that. We know that researchers know a lot, a lot more than what farmers know. And that is a fact that we acknowledge coming from the farmers. But we also know that there's a lot that farmers know that researchers don't. And guess what? There's a lot that both don't know. Yeah. And so there's still room for them to work together and deal with all those things that they don't know. It's really the same way that we deal with other sectors. I think part of the innovation is in the thinking, is in the engineering change outside a gadget, engineering society, and engineering policy. How do you repurpose subsidies? We are part of the high-level panel on subsidies. How do you repurpose that which you have to actually give you much more bang for the buck? But I think it's easy to engineer things than to engineer some abstract policy and society. But if we run away from it, we are running away from the solution. We are going to be repeating the same. That's my take.
Desiree?
I'll be short, Ivo. I think I just want to touch on the yield part, right? And Prof has said it as well. So regenerative agriculture, what we're seeing as when we engage with the farmers on the ground, the evidence that is coming from them is the reduction in their input cost. So that reduction in their input costs, given the environment we're living in of high input costs, lead to higher margin. So majority of the farmers that are leading into implementing this regen, it reduces their capex cost, it reduces their input cost, then it leads them to be able to get greater margins. That's what we're seeing on the ground. So on the yield part, Prof has said it as well. At a later stage, the yields will get to the maximum at which the farmers can be able to export. And another important element to this is the regen farming, the way you farm as well, can lead from that grade C of maize that you get into a grade A, meaning that the pricing that you're selling at, because you got a grade A, given the way you farm, also leads to high margins. That's the theory we're using.
Michael?
Yeah. Luvo, is such an important question. So productivity of regenerative systems, and can we still support food security on a fully ecological basis of farming? And I think we can go beyond food security to food abundance, because we've got a lot of data working with our regenerative farmers. So on average, they picked up their yield 7%. Okay, that's a little figure. That's a bit of impact. But the farmers that have been doing this for a long time, we've got an example. A farmer in Natal averaging 13.5 tons of maize on dry land, on 60 kilograms of nitrogen. So the average for a Natal farmer is 150 to 200 kgs of nitrogen, and they're not getting to 10 tons on average. So abundance, not food security, abundance. But we keep on talking about yields and crops, but 90% of South Africa is livestock. High density grazing, regenerative grazing. We've got farmers that are quadrupling their stocking rate, and they can't keep up with the biomass that they're generating. Our national herd is 13 million, I think, odd. We can take that, what's 14, 52 million. We can have our South African national herd size at 52 million sustainably. And the only problem from that will be importing enough vaccines then for that size. But we can go beyond food security and to abundance. And I think regenerative agriculture and that resilience that gives, more stable yields and productivity as well. So you don't see those swings that you see with conventional farming.
Colleagues, we are doing really, really well for time, but I'm going to have to just take 1.5 more questions because we've got one more session. And thank you for asking all these interesting, difficult questions.
Okay. Hi, my name is Larato from the University of KwaZulu-Natal. My question is to the entire panel. So it seems like when we're talking about scaling the technologies, the data is an issue. It's available, but it is not available to everyone, or it's not in the right formats. You also mentioned the issue of precision agriculture, how maybe to the core, it's just about using the exact right things for the right purpose. So it can actually be scaled to smallholder farmers who don't have the necessary capital. And for that finance aspect, you also mentioned that you need advisory, technical. So it seems that there is a need for some sort of a horizontally coordinated mechanism or institution that is dedicated to upscaling climate smart agriculture. What do you think as a whole would be the opportunities that we can leverage on in the region, or the deterrents and challenges that would inhibit this mechanism or institution to actually scaling? Thanks.
Don't be scared, colleague. Who wants to take it?
Okay, let me go from, I'll give it a shot first, right? Where I'm sitting, I'm gonna speak from financing perspective. I think we need to coordinate better. We got the commercial banks, we got the DFIs, and we got the climate smart institutions or PEs that are funding this. What we need to do better is to work together. We can have let's take an example. You got the DFIs who can offer the concessionary lending, who can do the blended financing, and we can have the climate smart funds who can support from technical advice and de-risking, and we got the commercial banks who have the clientele and who can assist in scaling up this. So for me, from finance perspective, we need to coordinate better. Currently, we're working in silos, but if we can work together, we will be able to utilize and see the opportunities.
I just want to add to that. I think it comes back down to extension capacity. Data's increase, technology's increase, AI's increase, but AI is not going to help you communicate with a farmer as to what to do. And AI is actually very dangerous. We're seeing significant mistakes in interventions which are not actually aligned to the real life scenario. So AI also needs to be trained. So for me, it's extension capacity, and I looked into that. So the human relay is a broken link. South Africa, as an example, has fewer than 3,000 extension officers for over 2.3 million smallholder farmers. Province-level farmer-to-officer ratios run from roughly 415 to over 2,000 to 1, against the stated average and the ideal, which should be 1 to 250. So that's the scenario we're sitting in. So no matter how much data we have, how much technology we still have physical issues of infrastructural things, or not everybody